Hello, everybody. This is Toni Turner, and welcome to the Market Now as of Friday, December 1st, right after the markets close. Well, U.S. manufacturing remained subdued in November, with factory employment declining further as hiring slowed and layoffs increased, more evidence that the economy is losing momentum after a robust growth the last quarter. The PMI, which means the Purchasing Managers Index, from the Institute for Supply Management, issued today, followed on the heels of data on Thursday showing moderate growth in consumer spending and subsiding inflation in October. That's always good news. Most economists do not expect a recession next year and believe the Federal Reserve will be able to engineer the hoped-for soft landing. And on that nice note, let's go on to three charts that could give us some insight into the week to come. As we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the benchmark or the exchange-traded fund that closely follows our benchmark S&P 500 index. And the S&P tells us the mood and manner of the market, and as traders and investors, we like to know just what kind of mood the SPY or the S&P 500 is in. Now, the SPY closed today at $459.10, right up here. That is about 5% down from its all-time highs at $479.98 that took place in January, of 2022. And it's also right at, look left with me, it's also right at the July 27th high this past year that's acting as the current price high this year, we'll call it a relative high this year. So it's hitting that resistance. And I could maybe draw a straight line over here. We'll see. So we've got price resistance right where we are right now. Now, since that July 27th gap open and intraday high at 459.44, the SPY started dropping from there. Yeah, and into a downtrend, actually, and it had a really sweet uptrend early this year. And as you can see on this chart, as far back as we can see, if you look left, the SPY did a great job this year of walking up the 20-day moving average. Really a good job of walking up that line and a beautiful uptrend. But nothing can go up forever, especially price. So when we hit that July 27th high, then some profit taking started coming in, and the SPY fell down below the red line, the 20-day moving average, below the green line, the 50-day moving average. Fell to lows in August, popped back up, came back up through the 50 and the 20-day moving average, but couldn't hang, made a lower high, which is always kind of a signal we watch. So it rallied and then fell down to the 200-day moving average in October, tried to rally up from there just before the Israeli war. But of course couldn't hold that, bumped into the 50-day moving average, and rallied and fell finally to its October 27th low down here at $409.21. And from that July 27th high to this fall was 11% drop. And then we look at what happened after that. Bing, boom, it turned around from this October 27th low, and it started up very, very quickly. And we can say, well, what just happened? What happened is that if you look at a chart, interest rates started falling. And as we all know, interest rates have a big effect on the stock market. So companies can pay less interest for money they borrow is one way to look at it. There's a lot more, but this is where buyers come in when interest rates start falling from the highs that we experienced earlier. So this drew investors back into the market from the $409 low. The SPY bounced and started rapidly up through the 20-day moving average, up through the 200-day, the 20-day, the 50-day, walked along that for a few days, but then went up and rallied really steeply back up to those July 27th highs at 458, 459. So that is where we are right now at $459.10. Now, the only thing, and am I glad? Yes, I'm very glad. But I'm a trader and I look at angles here. If you look left with me, as we talked about before, you'll notice that the SPY kind of walked up. It traded at a premium to its 20-day moving average, but would come back down to it and then kind of walk up it like a staircase. And when it got to a really high premium over the 20-day moving average, it had to catch its breath and some profit taking finally came in. Well, this rose, this particular uptrend is much steeper at an angle than was the prior uptrend earlier this year. So while I'm very glad it happened and it's lots of fun to make money like this, all I'm saying here is we are at prior highs and the angle is very steep and we're at quite a premium to the 20-day moving average and of course the other averages as well. So maybe, just maybe, while this is all positive, I will add here, if we look down here at the 14-day RSI, when it hits that 70 line, price is considered to be overbought. And it has been overbought, the S&P, since the middle of November, which is actually kind of unusual for a time frame to be actually just a little bit above that 70 line. So all I'm saying is that we need to expect maybe that at some time here in the next coming week or two, maybe we pull into a rest stop a little bit, nothing harmful, but profit taking has to come in from time to time, nothing dramatic, but actually offering really good opportunities. So that's natural. Trade wisely, keep your stops in place. Our next chart today is a chart of the Invesco QQQ, symbol QQQ. As you all know, this is the exchange-traded fund that represents our NASDAQ 100, which consists of the top 100 non-financial companies by market capitalization in the NASDAQ 100. We're talking about Apple, Meta, NVIDIA, Alphabet, Tesla, that whole group. Now, the QQQs closed today, and I actually didn't grab that price, but they closed today at about 389. And that is about 5% below all-time highs in November of 2021 at $408.71. Now, the NASDAQ also this year, you can't see all of it, but the NASDAQ enjoyed a great uptrend in the first half of the year, and it went up to mid-July, relative high, right up here at $388. So we had a wonderful uptrend. The NASDAQ walked up the 20-day moving average, almost starting in January. And from this high up here, now the tech stocks have remained strong this year, so the Qs haven't fallen as quickly as the SPY, but they did start to soften up here, and that's a normal thing. And so from this July high at 388, it started falling down a little bit, dipped down in August, tried to move back up over its 20-day and 50-day moving average, did so, but made a lower high. And when we see that, we say, all right, there's a little more weakness coming in here. Did fall down to September lows here, then said, no, I'm going up again, rallied up. This was during the beginning part of the Israeli war. Moved up again, made a high, and then came down to its October lows just above, and it came down to the October 26th low at $342.35, just above the 200-day moving average. So again, we're back to mid or the end of October, so interest rates are starting to fall. And when interest rates go lower again, the market buyers come into the market. And again, don't forget the short covering that happens. So the Qs from this October low at $342.35, with the interest rates coming down a little bit, the Qs turned around and started a nice and very steep rally back up through the 20-day, up through the 50-day moving average, and kept right on going. Stopped a little bit at the at this area here around 365. Right here, got hung up in that for just barely a day, and then kept right on going, and then even gapped up a couple of weeks ago, and then started consolidating along this line. Now we can go back to the nearby support here is at 382 at the 20-day moving average. We can come down here to the October highs. That and along there presents a potential support down to, and again down to the that support comes in at about 373, 374. Then we look at the 50-day moving average at 368. So should the QQQ start coming down here, there's plenty of potential support levels that it can certainly find, as long as, as long as we have a good economy, as long as interest rates continue to fall, inflation is low, all that kind of thing. This rally should maybe continue certainly into and through December. And again, as I've told you before, the top months in the year, seasonally speaking, for the market is November, December, and January. So this is all positive. We'll see where if we get a little rest stop here. And remember, and I've always put in my books, trade to trade well and the money will follow. Our third chart today is a daily chart of the Invesco Solar ETF, the TAN, which is apropos. The TAN has 47 holdings, and in it has a lot of IT companies, utilities, industrials, financials, and materials. Of course, it is an international ETF. Top holdings include First Solar, Enphase Energy, Solar Edge, Sunrun, and Sunrun, I should say. The TAN closed today, as you can see over here, at $47.87. Now, why am I looking at this? Because I like to buy low and sell high. That's why. And most of these solar companies have taken a hit, but you can see now, you can see what happened here. On the left side of the chart, but look over here with me, we can see that the TAN was trading at 67 to 74, kind of trading in a range here. From May, June, and then into July. And then in August, it gapped down here to $64.82. And then it slid down from there. And a lot of things slid down, of course, this year. It slid down here all the way down to October lows to $40. Right here, it made a low of $40.74. Rallied up slightly, bumped into the 20-day moving average, couldn't get over it. And look, this whole quarter here, it's bumped into the 20-day and couldn't get over it. The 20-day can act as support, and it can certainly act as resistance. But we had these two little October lows here, nothing anybody much was paying attention to. But if you stand back and look at this chart a little bit, you can see that in the middle of October, volume started. You kind of have to back up and look at it. But look at how, if you look at all this and where the volume is, just eyeball it on this chart, and then look at how volume is starting to come into the TAN here. That's another thing that interested me. And notice that when it made this low down at $40.74, it bounced up, it rallied up to the 20-day, fell back down, but didn't make a lower low, actually rallied up or came down to $40.55. And then it got a burst of energy right here from this volume, moved up, hit the 50-day, had trouble getting over that for the last 2 weeks, but stayed above the 20-day. Volume, it remains strong as compared to volume before, earlier this year and last summer. And today it popped up above, sitting on the 20-day, popped up above the 50-day and closed at the end of the day on pretty strong volume for a Friday. So again, closing at $47.87 above the 20-day, above the 50-day. So looking at that, if in the coming week the TAN stays above the 50-day moving average, which is now coming in at $46.27, I'm going to add a small position to my trading portfolio, and I'm going to put in my stop down here at $43.90. It's a pretty tight stop. If and when the TAN, see this prior high back here? So if and when the TAN climbs over $51 and stays above it for 3 days, I will add to my position, and of course by then I will be trailing my stop. So you may want to keep an eye on the TAN in the coming week. Now, if you'd like to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps for Successful Trading, to Successful Trading. If you would like to learn how to swing trade, a great talent to have in this market. If you want to trade the trend to profits, hoping that's what we'll do with the TAN. If you are new to trading and want a lesson on how to read charts, this is a really good one. We have 3 winning setups for short-term traders, and another one that I really like a lot that has to do with trend trading is Bottom Fish Like a Pro. If you like to learn these programs, just check them out. They are going to show you how to elevate your trading skill set and how to increase your gains quickly and easily. Go ahead and check out all of my online training courses by going to the link on this screen or simply click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.